This is the history of money.
Hey there folks, John Oliver here, ready to take you into the wild world of digital currencies. But before we get ahead of ourselves, let's take a step back in time. Remember bartering, trading chickens for shoes? It was a simpler time, but not exactly efficient, yet not ideal, so we invented money. Coins made of precious metals became the new standard. Over the centuries, we've used various items as money. Shells, gold, even those giant stone donuts from the island of Yap. Each culture had its own unique form of currency. The point is, money has always been evolving, adapting to the needs of society. Now, we're in the digital age. We use credit cards, online payments, and now digital currencies. It's a whole new ballgame. It's like money's awkward teenage phase, but with potentially huge consequences. The transition is both exciting and nerve-wracking. Think of it like this. Remember dial-up internet? Painfully slow and frustrating. Then broadband came along. Boom, everything changed. Faster, more reliable. Digital currencies could be like broadband for money, faster, more efficient, and potentially revolutionizing everything we know about finance. But like any teenager, there are growing pains, risks, uncertainties, and a lot of unknowns. There's also the potential for things to go very, very wrong. Financial crises, security issues, you name it. So buckle up, because things are about to get interesting. The future of money is unfolding right before our eyes, and it's going to be a wild ride. In 2008, a mysterious figure or figures using the name Satoshi Nakamoto unleashed Bitcoin upon the world. This marked the beginning of a financial revolution that would challenge traditional banking systems. This wasn't just another online payment system, it was a decentralized digital currency, free from the control of any single entity. This was a whole new kind of currency, existing entirely digitally, controlled by complex algorithms, not governments or banks. It was a peer-to-peer system that allowed users to transact directly with each other. Imagine a currency where transactions are transparent, fees are minimal, and the system is virtually impossible to manipulate. Every transaction is recorded on a public ledger called the blockchain. That's the promise of Bitcoin and other cryptocurrencies. They offer a new way to think about and use money, one that is more secure and efficient. Of course, with all new technologies, there's hype. People are excited about the potential, but there are also skeptics. Bitcoin's value has soared and crashed like a roller coaster on a sugar rush. Its volatility has made headlines and attracted both investors and critics. But the underlying technology, that's what's really exciting. Blockchain technology has applications far beyond just digital currencies. Think of the internet in the early 90s. It was a new and confusing technology for many. Everyone thought it was just for nerds and cat pictures. Now, it's essential. The internet has transformed every aspect of our lives. Digital currencies could be the same way. They have the potential to revolutionize how we conduct transactions and store value. They could change how we think about money entirely. As more people and businesses adopt digital currencies, we may see a shift in the global monetary system. Let's talk about blockchain. Now, I know what you're thinking, John, please, not another tech buzzword, but trust me on this one. Blockchain is the engine driving the digital currency revolution. Imagine a digital ledger spread across countless computers. Every transaction is recorded on this ledger, and once it's there forever. It's like a permanent, unchangeable record of every Bitcoin pizza ever purchased. This decentralized, transparent system is what makes digital currencies so secure and difficult to manipulate. It's like trying to rob a bank guarded by 1 million accountants with identical copies of the ledger. Good luck with that. Blockchain has the potential to revolutionize more than just finance. Supply chains, voting systems, even healthcare records could benefit from this technology. It's like the Swiss Army knife of the digital world. Now, governments around the world are paying attention. They're seeing the potential of digital currencies, but they're not too keen on letting Bitcoin run wild. Enter central bank digital currencies, or CBDCs. Think of CBDCs as the official government-backed versions of digital currencies. They'd use blockchain technology, but be issued and regulated by central banks, just like our current physical money. It's like the difference between a wild Mustang and a thoroughbred racehorse. Both are powerful, but one's a bit more controlled. CBDCs could offer the benefits of digital currencies, faster transactions, lower costs, increased financial inclusion while still giving governments some control over their monetary systems. Section 5. A Brave New World. The potential benefits of CBDCs. So, why are governments so gung-ho about CBDCs? Well, they come with a whole host of potential benefits. First off, efficiency. Imagine paying your taxes or receiving government benefits instantly with minimal fees. No more waiting for checks to clear or dealing with mountains of paperwork. Then there's financial inclusion. Millions of people around the world lack access to traditional banking systems. CBDCs could provide a secure and accessible way for them to participate in the digital economy. And let's not forget about combating illicit activities. With every transaction recorded on the blockchain, money laundering and tax evasion become much more difficult. It's like giving financial criminals a digital cavity search. Not pleasant for them, but good for everyone else. Section 6. Banking on Change, how CBDCs could shake up traditional finance. Now, the rise of CBDCs could mean big changes for traditional banks. They're used to being the gatekeepers of our financial system, but CBDCs could challenge that dominance. Imagine a world where you could hold your money directly with the central bank, bypassing commercial banks altogether. That's a potential reality with CBDCs. Of course, banks won't go down without a fight. They're already investing heavily in their own digital technologies and exploring ways to adapt to this changing landscape. Think of it like the streaming wars. Netflix disrupted traditional television, but networks are fighting back with their own streaming services. The financial sector could see a similar battle play out. Section 7. Banking for all financial inclusion in the age of digital currencies. One of the most promising aspects of CBDCs is their potential to promote financial inclusion. Billions of people worldwide lack access to basic financial services like bank accounts or credit. This limits their economic opportunities and perpetuates poverty. CBDCs could change that. With just a smartphone and an internet connection, anyone could access and manage their money digitally. This could be a game changer for developing countries and marginalized communities. Imagine a world where a farmer in rural India can receive payments for their crops directly without relying on expensive middlemen. Or where a refugee fleeing conflict can access their funds safely and securely, no matter where they are. That's the power of financial inclusion. Section 8. Taming the Wild West, regulation and oversight of digital currencies. Now, with any new technology, there are risks, and digital currencies are no exception. That's why governments around the world are grappling with how to regulate this rapidly evolving space. It's like trying to wrangle a herd of digital cats. They're fast, unpredictable, and constantly finding new ways to escape your grasp. One of the biggest challenges is striking the right balance between fostering innovation and protecting consumers. Too much regulation could stifle creativity and slow down adoption. Too little could leave people vulnerable to scams and fraud. It's a delicate dance, and governments are still figuring out the steps. Section 9. Big Brother's Bitcoin, privacy and security in a digital financial world. Another major concern with digital currencies is privacy. With every transaction recorded on a public ledger, some worry that our financial lives could become an open book. Imagine if every purchase you made, every donation you gave, every embarrassing online purchase was viewable by anyone with an internet connection. Not exactly ideal, right? That's why developers are working on privacy-enhancing technologies for digital currencies. These technologies aim to allow for secure and anonymous transactions while still maintaining the transparency and accountability of the blockchain. It's like having your financial cake and eating it too, but with less cake and more complex cryptography. Section 10. Cash is king, but for how long? The future of physical money. So with all this talk of digital currencies, what happens to good old-fashioned cash? Is it on the brink of extinction, or does it still have a place in our wallets? Will we soon be living in a cashless society? Well, it's certainly possible. The rise of digital payment methods has made transactions faster and more convenient. In many countries, the use of cash is already declining as people opt for contactless payments and digital transactions, but cash is resilient. It has survived many technological advancements over the years. It's still the preferred payment method for many, especially in developing countries and for certain types of transactions. In these regions, cash is not just a payment method, but a necessity. Plus, some people just like the feel of cold, hard cash in their hands. There's a certain satisfaction in holding physical money that digital currencies can't replicate. It's like that old sweater you can't bring yourself to throw away. It holds sentimental value and a sense of security. It might be a bit outdated, but it's comfortable and familiar. For many, cash represents a simpler time, free from the complexities of modern technology. The future of cash is uncertain, but it's likely to stick around for a while longer. As long as there are people who value its tangible nature, cash will continue to have a role in our economy. At least until we can figure out how to fold a $20 bill into a tiny origami swan. And who knows, maybe that will be the next big trend in the world of physical money.